All right, video number 3. In video number 3, we're going to take a look at what's called the foreign exchange market. Another name for the foreign exchange market is the Forex. So the foreign exchange market, or the Forex, as you'll see it on the AP exam, what it does is it takes a look at the trade between two countries or countries, and it looks at how the trade between these countries affects the value of the currencies for the respective countries. So foreign exchange, another look at globalization, how globalization and international trade affects the value of currency. So let's get right into it. All right, 2012, last year, the Summer Olympics were held in London. And you may recall this, you may have watched this, you may have been excited about it. Lots of people were excited about it. We were immersed in the Olympics. So the United States, we always do pretty well in the Olympics. And we had a really good Olympic gymnastic team. So let's just say that I'm an American citizen, which I am, and I want to travel to the Olympics. I want to go watch these games. I want to root on my team, right? I want to support and be patriotic for the United States. Well, when I go to this country, when I go to London, England, I'm going to have my currency. I'm going to have US dollars because that's how I get paid. So when I go to this country, the question is, how am I going to pay for British stuff? How am I going to pay for a hotel or going out to the restaurant or whatever? Because they're not going to want my dollars. Or they may want them, but they're not going to want to be paid in them. They're going to want to be paid in their currency. And so in England, they don't use the dollar, they use the pound. Okay, so the question is, how do I get the pound? Well, basically what I do is I buy it. And I buy it like I would buy almost any other commodity. Because really that's all it is it's an asset for us. Actually, it's the most basic financial asset that holds value. So, what do? All right, enter the foreign exchange market. Now, last year, actually this might have been during the holidays, so it's still last year, I was in Chicago. My wife and I were in Chicago. And we were walking around downtown, and I turned and saw this store. Okay, and if you look at the store, you can see there's lots of different stuff going on at this store. But one thing in particular I want to draw your attention to is this little box. And see this little box that says buy and sell euros. Okay, so a euro is basically the currency used by Europeans. Now, the British, they still use the pound for ceremonial purposes, but they're involved in the European Union. That's for another class. Anyway, so where can I go? As I said before, the question before, where can I go to get foreign currency? Well, there's lots of places. I can go to a bank. I can go to this money market store right here. I can go to a check cashing store sometimes. There's an entire market based around the trade of currency. Okay, here's another question. Why does one country's people want another country's stuff? Why do we even care? Why do we want other countries' stuff? Well, it boils down to several factors, okay? And the factors influence our desire for those goods. For instance, consumer tastes. Maybe we just like other countries' stuff. I drive a Mazda RX-8. Well, Mazda is not an American-made car. It's a Japanese car. I just like it. I like it better than, let's say, a Ford Focus. Number 2, relative prices. Okay, sometimes my currency is going to appreciate relative to another country. I might want to buy other people's stuff because I can get more with my money. Number 3, exchange rates. All right, so sometimes when I exchange my money for other people's money, my money is actually more valuable, and so the relative price of another country's stuff is going to be cheaper than my stuff, kind of like the previous point. All right, additionally, my income. Maybe I get paid more. Maybe my actual income goes up, and so I can buy not only more domestic stuff, but I can buy more foreign stuff. All right? Another reason why people might want another country's stuff deals with the cost of transporting goods. Now, this might be more or less our desire to not buy if it's more expensive to ship. But nonetheless, if it's cheaper to make something somewhere else, ship it here in the United States, get it here and sell it here, and we can reduce our bottom line, increase our profit margin, we might do that. Finally, what could influence my ability to buy something else from another country might be government policies. Some things like tariffs, okay? Like I have to pay a tariff to get a product from another country. It's like a tax, basically. And then trade blocks, okay? Sometimes we have trade blocks like NAFTA, North American Free Trade Agreement, or the European Union. These are all examples of why we would want to buy other people's stuff or have the ability to do that. Now, it boils down to three main variables that influence the demand for foreign money. And when you see this on the AP exam, this is usually what they're going to talk about. Number one, travel. Okay, travel. I want to go to another country. I need to buy that country's money so I can buy that country's stuff. Number two, trade. All right, I want to buy another country's stuff, period. Number three, interest rates. Relative interest rates influence the cost of, let's say, me purchasing another country's assets. So if interest rates are higher in another country, I might be more willing to invest in that country's assets so I can get a bigger return. Okay, let's talk again about the foreign exchange market. Formally, the foreign exchange market is a literal market. Think of it as a place you go, just like that picture I showed before, which gives us an ability to buy and sell trade or currencies. All right, whether it's the British pound, the US dollar, or the European euro. It gives us the ability to trade these currencies, and thus we have a market for currency. There's actually currency traders that do this every day to try to make profit on this product. All right. Now, the exchange rate, again, is the rate at which we can trade currency in one form for another. There are different types of markets. We have what are called fixed exchange markets, or sometimes they refer to these as pegged markets. Like if one country pegs their currency to the US dollar, anytime the US dollar appreciates, theirs will appreciate, or depreciates, theirs will depreciate, etc. But most countries are engaged in what's called flexible exchange rates, which what that means is that the laws of supply and demand dictate the value of currency. So here's a couple terms you need to know. Number one, appreciation. If a country's currency gets more valuable relative to another country's currency, that means that it has appreciated. For instance, the dollar over the last few years has actually gone down in value relative to the euro and to the Canadian dollar. And so we haven't seen appreciation, but rather we've seen depreciation of our currency. That means that it has weakened. So if our dollar gets stronger, that means it is appreciating. If our dollar gets weaker, that means it's depreciating. And once again, it turns out this has a lot to do with foreign demand for dollars or our demand for foreign currency. Now, how can we figure out the exchange rate? How can we figure out the exchange rate? How do we determine the rate of exchange? Well, it turns out we can just go right to Google. So let's do it. Okay, so I want to go to Google, and I want to figure out how much $1 US will convert to British pound. Okay, British pound. And there we are. It's very easy to see here that we have the US dollar to the British pound here. So $1 is equal to 0.65 British pound sterling, meaning if I give them $1, they're going to give me 0.65 of their currency. So does that make our currency stronger or weaker to the British pound? Well, I think you can figure it out that for us to have a dollar that is equivalent to the British pound, we'd have to get 1 British pound back. Since we have a 0.65 British pound for our dollar, that means our dollar is weak to theirs. Okay, so now let's go back to our PowerPoint here for a second. And actually, before we do that, it's pretty cool. You can kind of go through anybody's currency here and basically determine what the value of the dollar is. But anyhow, let's go back to the PowerPoint and look at how we can determine how much it'll cost for us to stay in England for a night in a hotel. Okay, so I know the rate of exchange now because I just looked it up. $1 is worth 0.65 British pound. So the question is, how many dollars am I going to have to come up with to get 1 British pound? Well, it turns out the answer can be found by just doing a little division. I need to look at the ratio of dollars to British pounds. How do I do that? Well, I divide the exchange rate. So I'm going to take 1 US dollar divided by 0.65, and it's giving me 153 US dollars. So $1.53. I got to come up with $1.53 to get 1 British pound. Now, let's say that I'm flying to England. I want to go watch the Olympics. And in England, to stay in England, it's going to cost me £500 per night to stay in the hotel room. How do I figure out how much that's going to convert to US dollars? Well, now it's a little multiplication. I'm going to take $1.53 times £500 per night, and that's going to give me $765. So effectively, what that means is I'm now going to have to come up with $765 not 500 pounds, not $500, but $765 to stay in a hotel in England. All right, let's take another country. And I already went ahead and figured out the exchange rate based on Google here a minute ago. We're going to take Mexican pesos now. All right, so now my dollar is actually stronger than Mexican pesos. So, like in other words, if I wanted to go to Mexico, I'm going to get 12 pesos, basically, a little more than 12 pesos, in exchange for my dollar, because our dollar is stronger than their currency. All right, so let's perform the same division here. I'm going to want to know how many dollars, if you will, I'm going to have to bring to the table to get 1 Mexican peso. All right, simple division again. Take 1 divided by 12.12, or the ratio of dollars to pesos, and I've got to basically come up with 0.083 US dollars to get 1 Mexican peso. Okay, so now let's say that it costs 500 pesos to stay in a hotel room in Mexico. What's that going to cost me in US dollars? Again, all I got to do is multiply. So, 0.083 times $500 gives me $41.66. Therefore, it will cost me significantly less to stay in Mexico than it will to stay in England. All right, let's bring it full circle here.